Sentiment has certainly changed, and as we go into the close here, there's just so many things, that are weighing on investors' minds. Certainly this healthcare news, but more importantly, whether it's what's going on with China or the Brexit news or France or our political environment. So we have definitely seen a significant change in sentiment in the recent weeks with investors.
Can you recall another period of market sell-off in which people were grasping so hard at narratives and not really finding a clear story of what's behind it all?
That's a really good point. It's hard to say it. I think that's probably the best indication that the sentiment has changed. Good news is bad news, and bad news is bad news. And we talk about the China news today, industrial production and retail sales, and that's troubling. But here in the United States, we had the same data come out today, and that actually, industrial production and retail sales, that actually came out better than expected. But people just are not seeing that.
Eric, who's the buyer in this kind of market environment? We were talking with Tony Dwyer earlier, and he couldn't pinpoint one. Who would be buying or who should be buying when we've seen these kinds of moves?
Who should be buying? I really think a prudent investor should be buying. When you look around, investors wake up in the morning and they see so many things to worry about, but there's a lot of good things going on right now, and unless you really think things are going to go off the cliff next year or soon thereafter, this is a great opportunity. We're trading at 15 times earnings now. This is probably a golden age for the consumer in terms of wages and jobs. Housing's recovered, inflation's low, money's still pretty cheap. It's good times, unless you. And of course, investors are always thinking about, is this as good as it gets? But we still have probably some good times to come.
I'm looking on the Bloomberg here at AVAT, average volume at time, and we're not seeing a huge spike in volume despite the big losses on the major indexes. It's actually just barely above the 20-day moving average.
Nevertheless, there was relentless selling into the last few hours of trading. We're down by almost 2 percentage points across the board. Every single major industry group on the downside of the S&P 500, healthcare leading the way lower. But even your real estate and your utilities were in the red as well. There really was no area to hide. And Nasdaq, once again, the laggard, so tech underperforming.
And it was a weekly loss as well. You're looking at the 4th weekly loss in 5, the 8th weekly loss in 12. So this has been a distinct trend over the last couple of weeks. It's certainly something where people are looking for the catalyst to say all is clear, or at least some of the way is clear.
On the bright side, the Dow didn't quite fall 500 points, so...
There you go.
Something,
and 2,600 even.
Yeah, and the S&P didn't quite fall 2%.
All about silver linings.
A little bit of silver lining to go into the weekend.
Nevertheless, the S&P closes at its lowest level since April, and you're seeing